If you're buying a home in Florida in 2026, this video could save you tens of thousands of dollars. I'm going to show you 8 things nobody explains until it's too late, and number 3 is where most people lose money. I'm Joel Poulin, your Florida real estate agent. I've watched too many smart buyers get blindsided by things that nobody warned them about. Insurance nobody explains, flood rules nobody checks, HOA traps that turn $300 a month into $3,000 overnight, flood insurance, flood zones, the new condo crisis, new construction warranty gaps, short-term rental rules, the citizens flood mandate nobody is talking about, wire fraud is up 58%, and loan programs to big box lenders nobody wants to mention. Stick with me, this is the conversation that I wish every Florida buyer had before they wrote an offer. Number 1, Florida insurance. This is what out-of-state buyers get wrong more than anything else. Wind coverage, hurricane deductibles, roof age rules. Carriers are dropping policies. You can qualify for the house, you can qualify for the loan, and still not afford it because of the insurance. The average Florida insurance premium in 2026 is around $4,200 a year, more than double the national average. For coastal or older homes, it can range anywhere from $6,000 to $10,000 a year. Here's what most people miss. Florida hurricane deductibles are a percentage of your dwelling coverage, usually 2, 5, or 10%. On a $400,000 home with a 5% deductible, that's $20,000 out of pocket before insurance pays you a dime. Your roof is the single biggest factor. Under 15 years old, carriers can't deny you solely on the age. Cross 15 years and they require an inspection. If that inspection doesn't show 5 years of useful life remaining, the coverage is refused. Carriers also drop people consistently. You can be insured today and have a non-renewal letter the next year. The rule I tell every buyer, you might qualify for the house, but you might not qualify for the insurance. If you can't get affordable insurance, you can't afford the home. With my clients, we run real insurance quotes as part of the due diligence process. Number 2, flood zones. The most misunderstood thing in Florida real estate. First, homeowners insurance does not cover flood damage. Burst pipe, yes. Water rising from the ground, no. You need a separate flood policy, period. FEMA data shows that 25 to 30% of all flood insurance claims come from properties in low-lying or moderate risk zones, the exact zones where insurance isn't required. A lot of buyers hear Flood Zone X and they think that they're safe. Flood Zone X means that the lender doesn't require flood insurance. It doesn't mean that there is zero risk. After Hurricanes Milton and Helen in 2024, thousands of Zone X homeowners had claims denied because they didn't carry flood coverage. Some lost everything. Zone X flood insurance costs $400 to $1,200 a year. AE zones cost $2,000 to $10,000 a year. The difference between a cheap home in a risky zone and a slightly higher home in a safer zone can be tens of thousands of dollars over the life of the mortgage. If you're in AE zone, the lender requires flood insurance, which is not optional and part of your monthly payment. And FEMA redraws flood maps consistently, so your zone today might not be your zone in 5 years. The bottom line, I tell every client to get flood insurance regardless of the zone. You don't want to be the person arguing with FEMA after a storm. Number 3, the big one. The most dangerous section in this video. HOA fees and the Florida condo crisis. Special assessments of $50,000 to $200,000 per unit are being levied across Florida right now. Per unit, per owner. In June 2021, Champlain Tower South in Surfside collapsed. 98 people died. Investigators found decades of deferred maintenance and nearly empty reserves. Florida responded. Every condo 3 stories or higher now has 3 requirements. 1, mandatory structural inspections at 30 years. 25 years if it's within 3 miles of the coast. 2, structural integrity reserve study every 10 years. And 3, this one's a big one. Effective this year, associations can no longer waive reserves for structural components. Owners used to vote to keep fees low by skipping contributions. Buildings that kicked the can for 30 years are now getting the bill all at once. $250 a month HOAs are turning into $700 overnight. $100,000 special assessments are hitting buildings all over Florida. There's another layer most agents never explain. Warrantable versus non-warrantable condos. A warrantable condo meets Fannie Mae and Freddie Mac lending rules. Conventional FHA, VA all work. Lower rates, lower down payments. A non-warrantable condo fails these tests. Often no FHA, no VA, sometimes not even conventional. Down payments of 25 to 30% cash. Higher interest rates, harder to resell. The question most buyers never ask is, what does the CSRS report say? And how is the building funding its reserves right now? If your agent can't answer that in 30 seconds, then you have the wrong agent. With my condo buyers, we pull the milestone inspections. We review the CSRS, we check the reserves, we pull board meeting minutes, verify warrantability, and a $50,000 assessment 6 months after closing isn't a surprise. It's a failure of due diligence. Quick pause here. If you're buying in Florida and you want someone who's going to give it to you straight, who checks the insurance and pulls the reserves, who runs the flood map, my contact info is right below this video. Call or text me anytime. That's the fastest way to reach me. You can also search homes on my website, www.soldwithjoel.com. I work with buyers all across Florida, and I'd love to help you get into the right home the first time. All right, let's get back into it. Number 4, new construction warranties. If you think a builder's warranty has you fully covered, you might be setting yourself up for an expensive surprise. As of July 1st, 2025, Florida law requires every builder to provide at least a 1-year warranty on newly constructed homes. That's the legal minimum, not 10 years, not 5, 1. Many builders offer more. This is what's called a 1, 2, or 10-year warranty. 1 year of workmanship, 2 years of systems, and 10 years of structural coverage. But that's through third-party programs like 210 or Structure. Not required by law. You have to ask. And the 10-year structural only covers major defects: foundation, load-bearing walls, roof framing, not small cracks, not settling, not cosmetic issues. What's usually not covered is hairline, drywall cracks, trim gaps, floor squeaks, cabinet alignment, caulking, grout, all labeled normal wear and tear, or settling. Translation, you pay for it. The most important thing in new construction is that you get a third-party inspection every time, even on brand new homes. I've seen missing insulation, reversed wiring, plumbing leaks behind drywall, all on brand new homes, all caught by an inspector. An inspector works for you. The builder's inspector works for the builder. Once you close, your leverage drops. The punch list and the final walkthrough is your last real chance to get things fixed without a fight. Document everything. Number 5 is short-term rental rules. If you're buying as an investment, planning to put the property on Airbnb, pay attention. Florida has a statewide short-term rental law. Senate Bill 280 would have centralized everything. The governor vetoed it in 2024. Local control still rules. Short-term rental rules in Florida can change from county to county and city to city. In some areas, literally from street to street. A property that's a gold mine in one block might be illegal to rent on another block. Most real estate listings don't disclose this anywhere. In Miami Beach, most residential zones require a 6-month and 1-day minimum. In Orlando, you can rent short-term, but only if you live on site and are present during the rental, and only half of the bedrooms. In Lake Worth Beach, right here in Palm Beach County, it's a 60-day minimum, and some HOAs and condo buildings ban short-term rentals outright, regardless of what the city says. The bottom line, if you're buying for an investment, verify short-term rental rules in writing before you write the offer. Check the county code, the city code, the HOA bylaws, zoning and tourist development tax requirements, and if anyone says, I think you can rent it short term, do your own research. Number 6, this one is brand new. Most buyers haven't heard about it. Citizens Property Insurance is Florida's state-run insurer of last resort. When private carriers won't cover you, Citizens does. A lot of Florida homeowners end up with Citizens, especially near the coast. Starting in 2026, right now, if you're insured through Citizens and your home is insured for $400,000 or more, you now have to carry flood insurance regardless of the flood zone. In 2027, it applies to every Citizens policy at any value. Before this, Zone X meant that you could skip flood. Now, if Citizens is your carrier, flood insurance is mandatory. No choice. If you don't carry it, you lose your wind coverage. Lose your wind coverage in Florida, and you effectively don't have homeowners insurance. On a $500,000 home in Zone X with Citizens, you now have to add $400 to $1,200 a year in flood insurance. In an AE zone, $2,000 to $10,000. A lot of buyers are finding this out 2 weeks before closing. My rule, if we're shopping where Citizens is likely the carrier, we run flood quotes as part of our due diligence. Number 7 is wire fraud, the one that nobody wants to talk about until it happens to them. In 2025, cyber criminals stole more than $275 million from real estate transactions. The FBI received over 12,000 fraud complaints. That's a 58% increase from 2024. These scammers are targeting Florida buyers every single day. Here's how it works. You're under contract, emailing your agent, lender, or the title company. Somewhere, one of those accounts gets compromised. Scammers watch. They learn the names, the timing, the closing date, and right before closing, you get an email that looks exactly like the title company. Same logo, same signature, new wire instructions. The email address is one character off, an L or an I, or an O for a 0, and you never notice. You wire the money and then it's gone. Moved through multiple accounts overseas within 24 to 48 hours. The FBI recovers about 58% when victims report within the first hour. After that, chances drop fast. The one rule that prevents 90% of real estate wire fraud: before you wire $1, pick up the phone. Call your title company at the number that they've had from day one, not the number in any one email. Verbally confirm every time, no exceptions. If anything in the middle of a transaction feels off, a slightly different email, new instructions, a request to wire somewhere different, you call. You don't act until you've spoken to a human voice that you trust. Number 8 is loan options, where a good local lender is worth gold and a bad one can cost you the house. Everyone knows the big three: FHA, VA, and conventional, but there are also more options. VA, if you're a veteran, hands down the best product in America. 0 down, no monthly PMI. If you served, use it. FHA, 3.5% down at a 580 credit score, 10% at a 500 to 579. Conventional, you do not need 20% down. Conventional can go as low as 3% for first-time buyers and 5% otherwise. PMI is not the $300 a month penalty that most people think. I've seen 800 plus credit score buyers pay under $100 a month in PMI on a $500,000 loan. The penalty for putting less down might cost you $90 a month, and the cash you keep earns you many times that. Now here's where it gets interesting. If you're buying an investment property, there's a loan called a DSCR loan. Debt Service Coverage Ratio, the investor's dream product. A DSCR loan qualifies you on the property's cash flow, not on personal income. No tax returns, no W-2s, no pay stubs, just a credit report, driver's license, and bank statements. If projected rents cover the mortgage payment, you qualify. The requirements are 20 to 25% down, a credit score of 620 plus, and a DSCR ratio of 1.0 or higher. Rates are half a point to a point and a half higher than conventional, but you can close in 21 to 30 days with almost no documentation. What this means for Florida investors: self-employed with terrible looking tax returns, you qualify. Already own multiple properties, you qualify. Foreign national, you qualify. Just laid off from your W-2, you can still qualify. If the property cash flows, you qualify. That's the whole test. There are also asset depletion loans for retirees with big 401k balances who don't want to generate taxable income. This is why local Florida loan officer is worth 10 times a big box lender. If one lender tells you no, that doesn't mean that the deal is dead. It means that you're talking to the wrong lender. Okay, here is my honest take. Florida in 2026 is still one of the best states in America to buy a home. No state income tax, incredible weather, strong appreciation, and beautiful real estate. But it's also one of the hardest states in America to buy a home in if you don't have someone in your corner who knows what they're looking at. The insurance math is different, the flood rules are different, the condo laws just changed, the warranty rules are new, short-term rental rules change street to street, wire fraud is more dangerous than ever, and most out-of-state buyers have never heard of any of this. Their old agent doesn't know it. Their national lender doesn't flag it. Most damage happens because nobody ever asked the right questions. My job isn't just to show you houses. My job is to make sure that 5 years from now, you're still happy you made the decision to move to Florida. If you're thinking about buying anywhere in Florida, give me a call at the information listed below. The fastest way to reach me is calling or texting. You can also search homes on my website, soldwithjoel.com. I work with buyers all over Florida, and I'd love to help you get this right the first time. I'm Joel Poulin, your Palm Beach real estate broker, and I'll see you in the next video.